Welcome, everybody. Welcome in. Just as a reminder, trading is risky. Don't copy anything you see on the show. Yada, yada, yada. Good afternoon. Let's go. Good afternoon. Hola. Hello, sir. Sir. Okay. Hi. Good afternoon. What else we got? First time tuning in. Okay. Welcome in. Nice to see some new people coming in. Joseph, hello everyone. Didn't know traded with the futures, just Jesse. Let's see. Heard great things about TFD. Awesome. I'm glad. Where did you hear him from? I want to know. Hola. Hello, Violet. Hi, SJX2. Hello. Is Jesse funded with TFDX or TFD? I'm sorry. No, I don't believe so. Hello, everyone. Hello. Okay, let me go kind of jump in. So as people are rolling in, how did everybody do today in the market? Did you guys do well? Did you struggle today? Were you still thinking we're going to continue running higher, or did you kind of see the writing on the wall? We're going to get a slight pullback. How did everybody feel about today? How did everybody perform today? Let's see how our audience did today. Let's see. Today's show, we're going to be talking about order flow today. We do have a guest today. His name is Jesse. He does live streams himself. I'm sure some of his guys are in here and gals are in here watching for that exact purpose. So we're going to go over some cool things today. We're going to talk about how to treat trading as a business, which is kind of the way you should be doing it. Trading should not be gambling. It should be a business, a well-run business. So you need to have enough capital, enough runway. Those are all very key things in trading. A lot of people get sucked into bad behaviors because most of these firms really encourage gambling behavior, and their models depend on you to gamble because that's how they make money. We're trying to change that narrative. We're trying to be different. We're trying to be better. I think that shows based on, you look at our feedback, you look at our reviews. We're, I think, one of the highest firms when it comes to ratings. And there's a reason behind it. We treat traders like they should be treated, with respect, and we actually care about traders, and we're trying to make them do well in the brokerage, and that's our philosophy. Let's see. Okay, cool. Raj brought up a little screen. Order flow 101 with Niels. That's tomorrow, so I may have overlapped a little bit of data or info. I don't know if we're actually talking about order flow today. I like to come into the shows not knowing what we're talking about, so I can be like you guys. I come in, kind of know a little bit about the show. I don't generally even talk to the person that we're interviewing because I don't like to have any idea of what we're going to talk about and kind of where that conversation is going to go. So it's more of a natural conversation, first time meet and greet kind of thing. So anyways, yeah, so scan the code. You can scan it. We're going to have another stream tomorrow at 12 p.m. Eastern. That's going to be with Niels. He's got background in, I want to say he worked at some other firms or something like that. So he has some real experience. He built a platform. It's called Delta Trader. Initially, it was called something else. They rebranded it, but it's a great platform for looking at, order flow. So cool stuff. We're going to have him on tomorrow. So as always, oh, okay. Raj is going to do fall trading sale. So 70% off. That's our largest sale that we've ever had percentage wise, right? And that is on static accounts. A lot of people like static accounts. They feel that they're easier to trade. We feel the same way because statics are very similar to what you would experience in a brokerage account. So we want to get big discounts on those and give people opportunity to trade accounts that were going to be very similar to what you would actually trade once you get to the brokerage with us, right? EOD accounts are still 50% off. So cool. If you guys are going to buy today, use Jesse W as your code because it just shows respect for the guest that we have on today, Jesse. We'll bring him in a minute here. As always, our giveaway today will be 50 likes. We should probably do 100 likes now. I think it's about time to graduate that. Maybe 75 likes. What do we think? Let's do that. 75 likes today. Anyways, I think it's time to bring in the guest, and it is Jesse. So let's put him on stage. Let's get him in here.
What's going on, guys? Thank you for having me.
Yeah, of course. Of course. I like the wall, the green. You should do some like green screen stuff in the background. Just do random stuff back there.
Yeah, I know. I've been playing around with that idea.
Cool. All right. So I have talking points because Raj has squared us away on that point. So treating prop trading like a business. I already kind of touched on it a little bit. I think everybody should do that. How do you fold into all this? Like, tell me about your backstory. What's your origin story for trading? How did you get into trading? How long have you been trading? Did you get straight into, futures, or did you kind of go the stock route, then futures or Forex? Like, how did you get where you're at right now? Could you share a little bit about your background?
Yeah, absolutely. So I've been trading now for about 8 years. Prior to that, I already knew about the existence of the stock market and had already dabbled a little bit. Way back in, was it 2001, 2002? I was a senior in high school, so I'm dating myself big time there. Not only does the gray hairs here on the beard date me, but now sharing that for sure. My dad had started a custodial account for me. It was with Scott Trade. I don't know if anybody remembers that name, Scott Trade. They got bought out by TD Ameritrade a few years back. And my dad wasn't a trader. He wasn't an investor. He just heard about the stock market on the radio and some lady that would talk about patterns, like, bull flags and U shapes and stuff like that. And he's like, hey, look, man, here's $1,000 in an account, figure it out. I didn't figure jack crap out, but I did get lucky. I bought Cisco and made $1,000 on it my senior year. I was like, "Oh, this is great." Left the money in there, and then I started playing around with pink sheets, and got nowhere real fast. And let's say about 8 years ago, a customer of mine at the time told me about a shipping company called DRYS. I don't know if anybody's ever heard of DRYS. They're not around anymore.
It wasn't a while back. It was one of those pump and dump stocks, right? It got some momentum and like crushed people, but also crushed short sellers' dreams too.
It was insane. It went from $1 to about $125 a share over the course of a week's time. It was in November. I'll never forget it. He put me onto it. I bought 100 shares. Flipped them when sold them out when they were at $3 and change. I was like, oh man, I just made almost $300 here. I'm a stock trader now, boy.
Mm-hmm.
And that thing started to go insane. It went all the way to, what was it, Jesse? About $15. Hey, what happened to your browser had lost connections to your camera? That's weird.
Oh, well, yeah, your audio is still good to go, but yeah, we definitely lost your video.
Okay.
I guess that green background is overpowering the camera. And just just messing around. Cool. All right. Crush short seller drink. Yeah, dude. Dries smoked people. I 100%. I got smoked by. I was trying. So I forget what strategy it was, but I think it was. I don't think it was maybe a Tim Sykes or something back in the day.
Oh man, yeah.
I got into it and there was like one of his disciples, right? And I started following him and I forget his name now, but it was AMC. And I was like, oh no, man, this level, it's got to hold. It's like this huge level and it's never going to get there again. And I remember trying to short it and I just got ran over and I was so new that I was like, no, it'll turn around. I'll catch the short eventually. And it's like, no, I just got ran over. I got killed. And of course at that time I didn't really use stops, so I just prayed and dreamed and hoped and wished and willed, and I just continued to get crushed. So yeah, that's a cool, interesting story about my own experience shorting something that's really hot. Just get long. Just get long.
Yeah, that's what I did. That's what I did too, right? When after I sold out, I bought DROS like at $15 or something like that, and held on to it until $50 and then $100, and sold like 15 shares throughout that, made $1,000 something, and
That's
I was like,
awesome, man.
yeah, I thought to myself, you know what? There's something here. I started chasing some of the other sympathy movers and lost most of it. And then I was like, okay, we're gonna have to stop here and figure this out because there's something here, right? There's a way to make money here. I have to figure out how it's done. 8 years later, here we are. I started trading futures during the COVID crash, and not with prop firms, just where did I start? I started out with Charles Schwab, and then I started trading with Ninja Trader, so my own capital. And what was it? Maybe 2 years.
Oh man, we totally lost him. All right, we'll give him a little bit to come back in. Nope, he's back and his camera's back. Awesome.
Yeah, so about, what is it, 2 years ago, I started learning about these props and jumped into it, and I really wish this existed in the way it exists now, way back when I first started trading.
Yeah, I agree. I mean, I wish I would have never got into the rabbit hole I got into in stocks and this different stuff that I did, and it was all my own personally funded accounts, and it's great when things work and you get sucked in because you're like, I remember I was trading momentum stuff, and it was kind of Ross Cameron-esque type, and that's who I started with, right? Yep. So I remember I was like, oh man, this is easy. I'm just ordering, I'm reading the tape, and I saw the momentum, and I remember I made like $2,500. I'm like, oh bro, this is easy. This is like, I'm gonna print money. And then you get past your luck phase, and then you start getting destroyed. Yep. And then you end up losing your account, and it's the typical origin story for most traders. And then I remember reading books back in the day, and it's like, oh, risk like 1% of your account, 2% max, and you're like, I don't want to risk that. That's going to take me forever to do anything. It's like, F that. And then the more, the longer time you spend in trading, you're like, no, you need to risk as small as you can, because that's what actually gives you the long-term sustainability. And most people don't realize that. And unfortunately, most of the firms out there, they really encourage gambling. Yeah. And that's cool. Maybe you'll get lucky and pass, one of these tests or something, but like, that's not long-term sustainable. And that's why we try to teach different things here. And we really try to get people to focus on the right thing, which is risk. Risk is everything. Like, if you can manage your risk, there's plenty of strategies out there. Just figure out a way to manage risk. That's the big one. Cool, man. So let's jump into trading props, or just trading in general, like a business. What's your philosophy on that? How did you get to that point? And how would you say you structure everything? Like, what's the way? How do you treat everything like a business?
So we look at this from the consistently profitable trader or the beginner trader, because for me there's two ways of looking at it.
Okay. However you want to segue into it. If it's the new trader.
I start off, as a new trader. I think, most of the people watching are rather new. I would say that if you're going to approach this as to start, and it's going to be, you want to look at it as a business, which is what it is from the get-go, and you're going to do it the prop world way, super easy. It's not complicated. You just got to pick a budget, right? And that budget's your evaluations. This is what we're going to spend every single month as a business expense in our business as we grow, right? So you open up a business, whether it's online or a physical brick and mortar store. Your first year, you're probably not making any money. But you are going to have expenses. You're going to have overhead. You're going to have marketing, etc. So you're going to approach it the same way. You're going to say, okay, I'm going to spend X amount of money every month on evaluations, and I'm going to spend X amount of money every month on education, right? And then you're gonna start that. And your first year, your main prerogative is to stay within budget. It's not to make money. You're brand new. You're not making money first year. If you are, my God, that's freaking crazy. Either you got lucky or you're a protege, right? So you're going to go ahead and try to end the year within budget. Then year number two, in my opinion, you're looking at maybe getting close to break even, possibly, maybe losing less money throughout the year. Right. Then as we progress to year three, at this point, if you've gone through a good program, if you've learned stuff, you're probably now pretty savvy at technical analysis. you're struggling with psychology. So again, you want to keep going the budget route, making sure you're not going over budget. At this point, you probably are looking at breaking even or even making a little bit of money, right? So maybe you can even expand your budget a little bit and continue to compound that and grow, right? You want to grow knowledge, you want to grow wisdom and emotional control. And then from there on, you keep going. I think by year 4, I think if it's going to happen, in my opinion, you should be break evenish by year 4. For me,
Yeah,
anyways,
I think that's 100% a great way to break everything down, and I think it's realistic. Like a lot of people, even when I started, I remember thinking, hearing, oh, it's a year. Within a year, you'll figure out, and you'll have some success, and anything before that, you'll be a protege and whatever, right? Come to find out, it's like, no, realistically, it's about a 4-year timeline. And it's not, trading is easy, but it's not, right? It's not the strategies. It's not any of that. It's the psychology. And I know people are like, well, plays a small part. No, it plays a huge part. And the more you're able to have like a routine and have rules and boundaries, and I know everybody gets into trading not to have rules and not to have like a boss and not, freedom, right?
Yeah.
But you'll never find success if you trade that way. You need to have a really solid foundation. You need to have those guardrails. You got to have somebody kind of watching over you or providing assistance, or you got to do it yourself. And I can tell you, just like any other professional athlete, you're not going to do that overnight. It's going to take at least 4 years minimum. I know when I first got in, I was thinking, a year and blah, blah, blah. It's like, no, dude, that doesn't happen. I think that's a very realistic timeline. And hopefully people actually understand that. It's like, no, it's a long-term commitment. You can find some success maybe early on, but sustainability is the important part. And it's really hard to have long-term sustainability unless you've had enough time to kind of experience everything and burn your hand enough times. Like it's like touching a hot stove, right? But with trading, sometimes you touch it, and instead of getting pain, you get like pleasure, right? That's like you get into a bad trade. You shouldn't be in it, but somehow you get rewarded for it, right? It's just like negative feedback loop that's so terrible. And that's what really is tough to get away from. And it does take time. So yeah, it's awesome, man. Great insight. So the next thing I guess we look at is like, okay, so you talked about your budget. Do you also consider that first year more of like exploratory, where you're looking at different strategies? It's like research and development before you even launch your company, right? Almost. So you're spending that time, like spending the money on education and practicing to figure out, well, what type of trader am I? What do I understand? What fits my psychology? Like, am I a scalper? Am I a long-term holder? Like, what is it, right? What makes me tick as a trader? And what do I understand? Those are all really things that new traders should be looking at, not thinking about making money at first, just trying to figure out what is going to work for them and what they understand. That's really important, I think, the first year. So where do you go from there? Like, as an experienced trader, maybe that has a couple years under their belt, where would you recommend they get started if they don't already have a business plan set up? How would you structure that for them? Somebody more experienced that already knows kind of what's going on and just doesn't have a plan.
Yeah, so it would be along the same way. So if you're already experienced and you're putting up your profitable trades there, might still struggle here and there, but overall you kind of know what you're doing, right? If you're going to go at it full time at that point, I'd say no. But if you are going to, then it's what I would tell anybody going full time to trade. Like if full time income from trading, that's what we're going to look for starting today, January 1st. Then in my opinion, the best way to approach that is that on December 31st, you should have already had the following year's entire year expense in a bank account ready for you to draw out of a salary every single month. This way, you're not trading January 2nd trying to make your mortgage payment for February 1st. That is an immense amount of pressure, right? Or your rent, or your car note, utilities, health insurance, all that stuff. If you're starting that way, the pressure is just going to be humongous. It's going to be way too much. And it's going to lead to taking bad trades. It's going to lead to forcing trades because, hey, you know what? Today I didn't see anything, but I got to make some money today, so I'm I'm gonna try right here. I'm gonna get long at 24,660 and see if I can make $400 because I need to make $400 so that I can make my payments on the month.
Yeah,
So
and at that point, you're no longer trading your strategy. You're trading for outcomes, right? You're like, hey, I don't have a setup, but I need this money, so I'm gonna go ahead and get involved in this trade. And then guess what? You get into the trade, it doesn't go well. So now your emotions take over and you're like, well, now I got to recover that money. So now you're trading for outcomes instead of trading your system. And that's never a situation you want to be involved in. I 100% agree. If you're going to trade for income, one, you better have been trading, and you have a really solid strategy and you've proven to yourself that you can actually make money from the market, because that extra stress of having to pay bills, for instance, like let's say you have a strategy and it just doesn't hit the whole month. Like, what do you do then? Because you traded the strategy well, but it didn't make any money. It's like, that's how trading is. Sometimes you make money, sometimes you don't. And it's okay. It's part of the strategy. But if you're so reliant on that money and you're like, dude, I have to make this money. Now you're trading everything and anything that moves and you're trying to force something that's not going to happen. And you end up losing the money, which hurts you even more because now you don't have the money to pay your bills. It's a really bad spot to start from. So
yep.
I would recommend doing exactly what he said. If you're going to do that, have the money in reserves where regardless of your outcome of your trades, doesn't matter because you have the money, right?
That way you give yourself a year. You give yourself a year, you figure it out this way. So I got enough money to cover 2026 expenses, including taking trips with the family. I got a salary for 2026. It's in the bank. I'm going to spend the whole year trading. If at the end of the year, you don't have the salary for 2027, then, maybe trading full-time isn't for you just yet. You know what I'm saying? Go find yourself a job and keep trying on the side.
Okay. So anybody that maybe already has a job that's trading part-time, do you have any guides for them or guidance for them? Have you ever, done that where you had a part-time job plus you traded? Like, how did that work out for you? Got any tips or tricks? Like, people love hearing about that type of stuff. Like, what guidance do you have on that front?
So, everybody on YouTube is that millionaire trader. I'm not a millionaire trader. I've made good money trading, especially this year, but everybody on YouTube is a millionaire trader. Everyone on there, says that all they do is trade. I haven't had a job, where you clock in and a boss and stuff like that, like 18, 19 years, something like that. I've been self-employed. So I've had multiple streams of income throughout my trading journey. So in that aspect, I can't really say it's easy to do it. If you have a full 9-to-5 type of job, the good thing is that if you're looking at this from trading futures, well, you can go work at your 9-to-5. You can trade Asia, right? You can get up earlier in the morning. If you got to get up at 8 to be at work by 9, well, you can get up at 6, trade the morning and go to work and come back. And if you want to, you can trade again, figure out a time zone, because the market's 23 hours. So figure out which one of those suits you, right? Where you can trade. Some people work from home, they can trade and work. So there's always that. But if you have a job and you're learning to trade, it definitely takes the pressure off in that sense. A lot of people are eager. They're eager. I want to leave my job. I want to just trade. I want to trade. Again, don't leave that job until you got at least a year's worth of expenses saved up and you're confident in your trading. If you're not consistently profitable, bro, if you're not making money on the year, I don't care if it's $5,000. Like if you made $5,000 this year, you made $5,000 next year, you made $5,000 the year after that, that's $15,000. It doesn't sound like a whole lot of money. Obviously, it's not over 3 years, but it's showing you consistency. You're consistently profitable. Now it's just about scaling.
Yeah. That's awesome. So honestly, people that have jobs, I say hold on to them because it's an edge in itself. And I think, finding a time period and a strategy that works, on your free time is actually a benefit. Sometimes when people go full in, let's say full ham into trading, right? They're literally sitting at a desk from, the moment they wake up until they go to bed. And that's great for learning and all that other stuff. But that I can tell you, you're going to end up over trading if you do that. And if you have a job, it's going to help decrease that want and desire to overtrade. you're only going to have limited time to trade. And if you can utilize your full-time job to cover your expenses and then only trade like a pocket of time, and if there's a trade, great. If not, then don't trade. I guarantee you'll find a lot more success doing that than just trying to go full-time trader. Because when you do, it's going to feel like freedom, but then you're going to go down this slippery slope where you're like, well, now I can trade all day long. And it's like, well, but my strategy only works from 9:30 market open to around 11. But then you're trading at 12 and 1 and 2, and now you're just losing your butt after that time, right? You're just losing all the money you made in the morning. And it's like, if you would have had a job, you wouldn't have to worry about that. You just take your trades and you're done for the day. Yeah, 100%. I think there is life outside of trading. And the more, so when I first got into trading, I was like obsessed. I get crazy like that. And I can tell you, Josh and I were both that way. We literally woke up and until we went to bed at night, we were on the screen all day, either replaying, back testing, looking at data. Like, it became all consuming, right? But did it really get me anywhere? No, I got somewhere when actually trading was more of like, I came in, I wasn't like, super excited. I was just like, yeah, it's my job. I would come in, and if I had trades, then I would take a trade. If I didn't, I wouldn't. And then I had so much more success doing it that way than just trying to master the screen all day long and trying to take every single trade. And it's just mentally, it's taxing. And also, you're just exposing yourself to the market so often that your risk of ruin is extremely high. Like, you are going to get fragged by the market. It just works that way.
Yep.
Cool. Let's open up some questions for Jesse, if anybody has some questions for him. And then maybe he can share a little bit out of his screens and kind of show us what he's trading, if he doesn't mind. If you can make money trading Asia, you're probably way ahead already. I've never traded Asia. I don't know. Jesse, have you traded Asia?
Yeah.
Okay. Is this statement ring true, or?
Just depends. I mean, usually my overnight trades like that, they're kind of like an autopilot type trade. Oh, I haven't done these in months now. Last time I did one, I think it was either I think it was in April. I think it might have been in April. I'll come in, look at the chart, I'll identify levels, and I'll put orders out, right? I'll put my entry order and then my stop orders, and I'll go to sleep. I'll wake up in the morning and I either made money, lost a little bit of money, or my orders never triggered. Let me tell you, it's some of the best trading that
because you're not, once it enters and it triggers you, you're like sleeping, so you're not like worried about the trade. Where sometimes when you get into a trade and you're actively watching the market, every little tick, you're like, is that the one? Is it gonna get? It's gonna get. Oh my god, I don't like the way this candle's looking, guys.
Yep.
But it's like it's all irrational, and you're like so scared of losing something, especially if you get in profit, and then you start making really bad decisions. Where if you're asleep, you're asleep, dude. It doesn't matter. It's gonna go where it goes, and that's really what trading is. If everybody could like get into a trade and have everything set and just turn their brains off, it would make a lot more money than sitting there and trying to actively interfere with their trade.
Yep. 100%.
Do you think trading while in debt can affect your Yeah, absolutely. There's so many things that can affect your trading. Fights, arguments with loved ones, lack of sleep. Like, dude, everything. Think about a professional athlete, basketball player, football player, whatever, hockey, doesn't matter, whatever sport it is. If you're not on your A game as a trader because you have a lack of sleep, dude, trading is very mentally taxing. And if you're slow or you're thinking or you're using emotional thought process, then good luck. If you're in debt and you're charging more debt on top of that to get involved with trading, you're just compounding the issue. And now you're always either worried about getting into more debt, or you're like, I need to make this happen, or else, I'm never gonna be able to pay this card off or whatever, right? It's not a good mindset to be in. I'm not saying it's impossible, but it's a lot harder. So I would recommend, if you're in a ton of debt like that, figure out how to get a job, a real job, to pay that off and get into a more mentally freeing state before you start trading, because you're really setting yourself up for a really tough climb. Like, it's already hard enough as a trader without debt and without like worrying about, your income. To add that on top of it, it's going to impact your trading. So I don't recommend doing that. Please remove daily loss. No, never. Sorry, it's not going to happen. The reason, look, okay, why is the daily loss even implemented, right? Most firms that don't have a daily loss, they don't care because they pay out of pocket. So the quicker you blow up, the faster reset, the better for them. But here's the thing. Our daily loss is 40% of your total account. There is no way or reason that a trader should be risking 40% of their account in one day. Why are we implementing that? It's an emergency stop. Don't rely on it. You should set your own stop. You should actually have a set stop, and this is data driven. We have data for our traders. We have data for who actually does well and who does bad. 20% or less of your total account. You should be more in the realm of 10%. And if you get a big enough account, I know this isn't reasonable for a prop account, but you should be risking about 2% of your total account. Why? Your risk of ruin is extremely high if you're risking either one, your total account in one day, or two, 40% of your account. And I help transition so many traders in the live accounts, and I always get pushback on this. They're like, no, I want that full 40%. I was like, okay, bro. I mean, I'd rather just pay you out than put the money in an account and have you lose it, because our data tells us anything over 20%, you're almost certain to fail. And that really comes down to statistics, right? Even if you have a 60% win rate, you have a 90-something% chance of having 7 losers in a row. And most of these people don't think about risk in that way. They think about how much money they can make. They do the napkin math. They don't think about that stuff. So I know that went longer than it should have for daily loss, but we're not going to remove it because it's a safeguard for traders. Nobody should be blowing up an entire account one day. And honestly, the 40% is probably too much. You need to reduce your risk to like 20% a day, because our goal is to transition you into a brokerage account with even smaller risk if possible, because we want you to be long-term successful. You need to manage risk. Get away from the old thinking. That's gambling mindset. You should not be risking a full account one day. It's not going to end well for you. You may get lucky sometimes. You may get payouts sometimes, but ultimately long-term, you're never going to find long-term success in trading, period. You won't. Statistically, it's not going to happen. It is what it is. Take per week, month. So data driven, right? And I'll just touch on this real quick before Jesse does. Our data suggests that you should take less than 4 trades a day. People that take over 4 trades a day have a lower P&L. Basically, they make less money. They may have a higher win rate, and this would make sense because they're probably forcing trades to try to win instead of focusing on, look, your win rate matters, but it doesn't matter as much as following your strategy and just letting things play out. But people that take less than 4 trades actually make a lot more money. So that's a solid number you can look at. 4 trades per day or below. There's actually a statistical edge there. So that's from the data. Jesse, what do you think about that?
Yeah, I mean, okay, so when it comes down to how many trades to take on a day, the traders got to look at their analytics and see where they're most profitable, right? What time of day, what days, what vehicle they trade, how long are they in these trades, and when they look at their green days versus their red days, which one has the most trades, right? And then you can set your rules based on that. The other thing is, I often see people talk about, the lockout feature. I want to be locked out when I hit $1,000 on the day. Okay, yeah, maybe if you're like newer or something, right? But me, no. I want to be locked out if I lose 1,000 or 2,000 on the day. But if I'm up 1,000, right, I'm gonna keep pushing, because if I'm on a hot streak, I'm on a hot streak. Last week on Wednesday, I made 7,000 and change, $7,500 on the day, one of my largest days. And I had gotten all the way up to like 81 or $8,200 on the day. And I said, you know what? I'm going to keep going, but I'm going to trail a mental stop on the account, right? At this point, because I'm up so big, I don't want to get emotional either. I was like, let's see if I can get to $10,000 on a day. I've never had a $10,000 day on a single one account. And, we got to like 81, $8,200. I got back down to what was it, $7,040 or something like that, and my stop, right, was like that 7,000, like underneath it, and I hit one more trade, got me back to $7,500 on the day. I said, all right, we're done. Today, traded one account, I was up $300, then I was up 600, finished the day up 1145 on it. on that one. But if I had that type of mentality of like, okay, I'm just gonna take 3 trades a day, whether I'm red or green, I'm done. Me personally, it doesn't work for me. For me, it's a max loss on the day, right? So on these prop accounts, depending how much profit I have in it, I might set a max loss on the day of $2,000, right? So like my regular day is $500 to $1,000 in profit, right? I don't want to go too much above that. So typically it's that $1,000 to $2,000 red day. Well, I'll say, okay, I'm done on the day. I'm clearly not reading the markets right. That I have 3 red trades in a row. I'll cut it there as well. That's 3 in a row. That's probably telling me I'm not reading these markets right. But yeah, other than that, my average days, I'll take in one account, I'll take 2 to 4 trades. 2 to 4 trades.
Cool. Let's see. What other questions do we got here? Yeah, it looks like some good information. Come patterns. All right, so here's another one. Why most traders blow up after getting funded, Jesse? What's your mindset on that? What are the common patterns? Who passes really quick, but then fails in the long run? We kind of talked about that a little bit, and then we'll move on to the next.
Yeah, it's very simple. It's super simple. You're YOLOing evals, right? Which, look, it's probably not the best thing to say, maybe, but I'll YOLO evals sometimes, a good chunk of times. Why? Because I'm not going to blow up the account afterwards like this. For the most part, I'm not, right? But if you're not consistently profitable yet and you're YOLOing evals, you're passing them really fast, and then you're blowing up, it's because you're taking that YOLO mentality into your sim funded account. You can't do that. Like, I might YOLO an eval, but when I go into my sim funded, that mentality stays behind me. Now my mentality is it's time to make money, right? I want to make money. I want to manage risk properly, and so on and so forth. You can't YOLO evals and then go YOLO your account. You're gonna blow it up. Why? Because, well, you have, let's say, a $2,000 drawdown. You don't have a $50,000 account that you can lose $49,900 on, right? Before it blows up. No, you lose $2,000, you blew up your account. You have a $2,000 account. Mm-hmm. You can't go out there trading 1, 2, 3 micros, 5 micros, and you might get lucky and put a buffer in there, and you might get payouts, but you can easily blow it up trading too large on day 1 or 2. It's the reality of it, And then if you treat your sim funded account like a video game, like, oh, it's not a big deal, I'll just buy another eval, then you're probably going to blow it up a lot. You're going to blow it up a lot. So those are the 2 main things I see people talk about when they blow up their accounts freshly started, right? Like, oh, I passed my eval today, freaking yay, awesome. And then what's today? Wednesday, and then next week, Tuesday, they already blew up their sim funded account.
And I think people need to, separate the 2, right? So you have an assessment. I get that you want to be super aggressive during the assessment, right? Because it's a time thing, right? Your time is worth money. During your camera's doing a little crazy stuff. So during the assessment, yeah, absolutely, you're gonna be more risky. That's why we give 40% max drawdown for people, because they want to be more aggressive, right? I get it, but that's the assessment. And sometimes you want to practice the way you're actually going to play the game, right? And let's say during the assessment, you're super aggressive, but once you get to the next stage, you're definitely going to want to approach it differently. You're going to want to scale down. You're going to want to think about risk, and you're going to want to give yourself enough runway. A lot of people, what they do, like he's saying, is they'll have 2K drawdown and they'll literally risk almost the entire 2K in one day. And it's like, dude, you're relying on one single day to dictate the outcome of this entire account. That's not a good way to do it. So technically, if you have like a 2K drawdown, you should be risking anywhere from 20 to 10% of that account, which gives you either 5 days or 10 days of runway. So a lot of these guys are like, they don't care. They're just, playing, gambling mindset and trying to get through it really quickly. And that's great. But once you get to the next stage, you better start thinking about risk, or that account's going to be really gone. You can't reset, the second stage. You got to start all over again. It's like, it didn't save you any time. Slow down, think about risk and do it the right way, and then you'll actually be able to take long-term payouts. And that's really what we see too through data.
Exactly. It's all about just mitigating that risk. You know, you go into your sim funded phase. It's not time to be trading those minis, especially if you're new. You gotta watch it. And I mean, later if we pull up the charts, I can show you, right? I'll show you how I mitigate risk, because I might trade. Well, I generally trade minis, but there's occasions where I trade micros. Oh, there's my charts. Okay, so there's occasions where I trade micros, right? It just depends where my stop loss is. This is not right now, in my opinion, a good setup, but we're going to use it as an example. Okay, so right here we have clear resistance at this 705 area. I don't think that's going to hold resistance much longer, but we're at 99. If I got short here, I got less than 10 points in stop loss. I can easily take a mini, right? What am I going to risk? 200, 250 bucks? It's not a big deal. It's just not a big deal. So I could trade a mini in this case. But if my stop is 50 points away, I can't trade a mini. I got to go down to micros to compensate for that difference in where my stop zone is. That's it. It's not that complicated when you're talking about trading patterns. Well, today in the yeah, you can see my daily, my hourly chart. Today in my live stream, I said, guys, watch for that head and shoulders that we have on the hourly chart on NQ, and look at that head and shoulders, bro. Right, left shoulder, head, right shoulder. Look at the break of that shoulder, of that neckline, straight down. Now we're gonna retest it. I wonder, you know, now that retest, if we can't break back up over that 800 zone, might not be a bad place to get short again for a little bit of a hold there. But yeah, I mean, that's why you say the micros or the minis. It all depends for me anyways on the chart. You know, if my risk is going to just be 250 bucks, yeah, I'll trade a mini. But if my risk is, you know, if on a mini is going to be near 1,000, then we got to drop it to micros. Otherwise, we're just going to blow up the account in 1 to 2 days.
What timeframes you use for analysis? Yeah, maybe you could give us a quick overview of kind of like what you're looking at, how you're setting up your level, stuff like that, if you don't mind.
Yeah, absolutely. So my trade ideas come out from, you know, looking at the daily chart, the hourly chart, the 15-minute chart. Those are the ones I look at the most, and I execute over here on the 3-minute chart. And the larger the time frame, the more validity you can get out of your levels, right? Like if you have 15 minutes of price action at you know, whatever, what is this, 750, at 750, is it going to be the same as having, you know, where is it, right here, you know, a few hours of support, because these are hourly candles of support at 800 zone? Probably not, right? Because you got 8 hours. Well, how many hours you got here? 1, 2, 3, 4. You got about 8 hours of support at a level versus 15 minutes of support at another level. The one that's been holding for 8 hours is more than likely going to have more strength than the one that's only been holding for 15 minutes. It's fresher, right? It's fresher. It's like a muscle that you've been working out at the gym. You know, you got 2 guys, 2 girls working out at the gym. They're just doing curls with their right arm. That's all they're doing. One of them's been doing it for 36 hours. The other one's been doing it for a whole month straight. Who do you think is going to be stronger, right? If they all started at the same base, who's going to be stronger? The one that's been doing it every day for a whole month. The same thing when we're looking at levels. The longer the level has shown up on a larger time frame, the more players it has on that field that are willing to defend that line. Now, will that line hold forever? Of course not. Nothing ever goes up forever. Nothing ever goes down forever, right? So the longer it's been holding, or the longer it's been holding support, the longer it's been holding resistance, the more likelihood you have of it holding again when it retests. So that's why I try to base my ideas off of the larger time frames.
Got it. So if you, for instance, okay, so do you start at the daily, then you go to the hourly, and then you go to the 15, or like, how do you find your levels? What do you look for? Or is it just, you know, support and resistance zones, or like
support and resistance zones? Okay. Yeah, support and resistance zones, coupled with patterns like the head and shoulder, for example, that we're seeing here.
Okay.
No No specific order. I don't care. I'll look at the hourly first, and then I'll go look at the daily, and then I'll look at the 15-minute. I mean, at the end of the day, I know what I'm looking for across them, and it's what I want to try to see is if what I'm seeing on the 15-minute, do I see it on the hourly? And what I see on the hourly, am I lucky enough to get it on the daily too? I don't need all three to line up at all, but if I do get them to line up, that just gives me more confidence on the trade. I think
what patterns do you have? Any favorite patterns that it sounds like you're more of a pattern type of trader. What are your favorite patterns?
I like patterns and setups. Yeah, absolutely. Head and shoulders, one of my favorite. I'm a better bear than bull.
Okay.
So head and shoulders and bear flags, I love them. Bear flags is probably my favorite. Bull flags I like as well. U-shaped patterns, ascending wedges, descending wedges. I look at all those cup and handles. Yeah, I like patterns, and I like setups into zones. So like if I identify, and we're not going to do this now because it's going to take too much time, but let's say I identify right here, it's clear as day on the 3-minute chart, we had resistance at that 700 mark, right? We got 700 psychological level. We all have known and heard of that. If I were lucky enough to get that to line up on the hourly chart as a potential previous level of support, then yeah, I might look to get short. I don't need anything else. I don't need a pattern per se. It's just the fact that this 3-minute setup is showing me resistance there. And if I can find that same possible resistance on the larger time frame, albeit preferably earlier support zone. So like here you could see on the hourly chart earlier, just a 1 hour candle, we had support at 700 zone, right? And now 700 is showing resistance. That to me is not enough. It's just 1 hour, right? But it is a play there. I could scalp it maybe. I've done it before. I'll jump in there short, right? And I'll scalp it. I'm not going to look for this thing to go test the lows necessarily, although today we have such weakness that we might. But I'm not sure. I don't think we're going to go break those lows. I could be horribly wrong. But this is why trading, we manage risk. So I just scalp that. But that's another way that I trade, right? It's just looking at those zones. I don't need to have a flag. I don't need to have a cup. I just look at the zones. And if my smaller time frame and my larger time frame are lining up there, I'll get short or long in front of that.
Got it. Okay, cool. Let's get into some more questions, and then also I think we have enough likes for the giveaway, so Jesse can butcher the names on that. That will be fun. Why 3-minute? Why not 2, 4, 5, or 6? Jesse?
Yeah, why not 12, 15, 25, 30 minutes? That's the thing with that. And I'm not knocking who is this? Lucky Ace. I'm not knocking you at all. I'm just saying it as what it is, right? It's like sometimes people say, "Oh, why do you only trade NQ? Well, why don't you trade ES or gold or oil?" It's just preference. It's very simple. I can answer it in this way. The 1 minute is way too noisy, way too many false signals. The 5-minute is a little bit too slow for me. So that 3-minute lands right there in between. So preferably for me, I do 3-minute, 15-minute, hourly, and daily. When I mentioned earlier about those overnight, trades that I set up, sometimes I also look at the 4-hour chart. Usually don't look at the 1 hour that much, but I'll take a peek at it because I like looking at those larger time frames. But my execution is coming off of the 3-minute for the simple fact that 1 minute and 2 minute are just too noisy. 5 minutes too slow. So we compromise right in the middle, 3-minute.
Yeah, just find what time period works for you and make sure you back test it, and then you're going to see. The market's fractal, so you'll see patterns on the 3 that you see on the 5-minute, or that you see on the hour. Like, it doesn't matter. Just find what fits for you. Like, I don't even trade like 1 or 2 minute. I trade volume, and it's the same patterns. It doesn't matter. Like, it's the same thing. I trade volume charts. It's just my preference. Is it better? No, it's just my preference. Yeah. Find out what works for you. It's part of discovering everything. Yep. Let's go. What do we have for likes, Raj? Where are we at?
Yeah, we're pretty much ready to start the giveaway.
Okay. Do you have the spinny wheel, or did you step up your game and we have the crazy, 3D game that I forget who it was that used it? I thought it was pretty cool. If not, we can do the spinny wheel. It's fine. Oh, look at that. He upgraded. This is the crazy marble game, right?
Yep.
What is that? That's cool.
A lot of names.
That is a lot of people. Oh my gosh. All right, cool.
And the entry or the finish line is somewhere down there.
Okay, cool. All right, let's start it. Let's watch it.
Hey, trading for keeps. I see you in the chat. Irani, what's up?
I'm glad you know how to use this because this looks a little weird to navigate. So
That's wild. I would not even know what to do with that. Look at that. It's like Mario Kart.
yeah,
Play
a
Mario
little
Kart
bit,
with
right?
I play
Does it
Mario Kart
speed them up
with
when
my
they come
with
through
my.
here?
Oh, I was playing Mario Kart with my nephew the other day, man. I thought I was good at that game still, bro. That kid put a
Smoked
whooping
you?
on me.
Yeah. You're all back in my day. I would have wrecked you. And it's like doing what is the sideways, where you're like, you're holding the drift, and then you kind of get the boost out of it. And he's like, that's old school, bro. There's a new way to do it. All right, what do we got? Who's winning? Who's winning? Man, this one's pretty fancy. Alex. All right, Alex, you gonna get all the way there? Or you gonna get taken out? Usually there's weird things going on and like stuff blowing people up. So let's see. Let's do the top 3. I think that works. Do 3 giveaways. So while this is going on, maybe we could do some questions and stuff, kind of just play this in the background. You stream every day, Jesse? Or do you stream?
No. So I stream Wednesdays at 9:15 a.m.
Okay.
I might start streaming later this fall, a couple more times a week, but I tend to only stream once a week. My main thing is, trying to focus on the trading, and it's kind of difficult to do while you're streaming at the same time. So
yeah,
at least for now, I'm only streaming once a week. I might bump it up to 2 or 3, but that 2 or 3 it might be in the afternoons. The other 2.
All right. So somebody in chat, I think, said you're 4-4 today, which I assume you had 4 trades, 4 wins. If anybody wants to check out Jesse, join his stream on like Wednesday. I'm sure he shares what he's doing. He talks about it before he even takes the trade. Look, I don't think there's any one strategy that's best for everyone. Like, you need to strategy hop a little bit when you're newer, figure out what actually works, what makes sense to you. And it's all about that, discovery of who you are as a trader. So the more stuff you get exposed to, the better. So join us streaming on Wednesdays, and, check it out, figure out, if it makes sense to you, if it, resonates with you, and then maybe you can learn something new. So I totally encourage everybody to go check out his stream. I'm sure we'll post his link somewhere. Maybe Raj will probably do that. What do we got?
Yeah, already in the description there.
Okay, awesome. Already in the description.
And I upload videos Mondays and Thursdays.
Okay, cool. All right, Jesse, time for you to butcher the first 3. Oh, man, come on.
It's an easy one.
Nothing, not too hard. All
Ahmed
right.
Elmi.
Okay.
Winner, chicken dinner.
All right. Next.
Oh, so how many?
Top 3.
Oh, top 3. Corey Staples with 2nd place, and Kirtha. Oh, damn it. That's the one I butchered. You won 3rd place.
All right, cool. All right, guys, let's jump into some more questions. Yes, that is our banner, 70%. As a reminder, use Jesse W as your code. He's come on stream today. Let's show some appreciation. Please use his code. Goes a long way to help support the channel and support him, all that stuff. Not even top. Damn, nowhere near the top. There's your risk reward per trade, Jesse. That's a good one. All right, Jennifer, what is your risk reward per trade, Jesse?
So risk reward per trade, it depends whether I'm trading my personal account or one of the props. But so the best case scenario, right, is risking $1 to make 2. So like it'll be maybe in my personal account, I'm risking 200 to make 400, and in a prop account, I'm risking 500 to make 1,000. It just depends. So it's, I'm risking $1 to make $2. Sometimes you get into really good risk reward scenarios where you're risking $1 to make $3, and you end up making $3 or $4 or $5. I know that happened to me last week on Wednesday. That's why I was able to make so much money on Wednesday. But generally, that's it, right? Where do I averagely land? I might be like risk $1 to make $1.50, $1.75, $1.25, because sometimes they don't work all the way, right? I scale out of my trades. So I might get a first take profit, and then the rest of it gets stopped out at a loss or gets stopped out at break even, or maybe it starts to go in my direction. If I'm short, it's going down, and I kind of trail that stop. and it pops back up and it stops me out in profit, albeit really tiny. So it'll skew that a little bit. But the goal is risk $1 to make 2 at minimum.
Cool. Awesome. What else do we have? Oh, look at that. Again, everyone who entered but has never won. So if you won last time, because I think we did this last time too, keep in mind you can't get the $20 credit again. But anybody that didn't win last time that is now entered, you get a $20 credit. You can use it for whatever. So cool stuff. Thanks, Raj. Appreciate it. That's a Jesse question. What is your opinion on partials? Do the benefits outweigh the disadvantages? What do you got?
Partials, what's my opinion? I scale in and out of my trades. For the most part, I always enter a starter position unless, I'm so close to my stop that I'm just going to go ahead and get my full size, or the trade setup is so perfect, that I'm going to go in full size. But I tend to scale into my trades and out of my trades. I believe that by scaling out of my trades, it allows me to remain in winning trades longer, thus improving my larger winning trades compared to my largest losing trades.
Your camera loves that.
Camera.
Hey, it's going off your hand signals, bro. It's like, okay, he wants me to zoom in.
They've told me to like I can go into the settings and get rid of that, but I just leave it now because it's good comedic relief.
It works well. Okay, cool. So look, scaling for Jesse and me, I love scaling. So I don't scale in. I take all on my entry, right? But I scale out. Is it more profitable for me? No, absolutely not. If I just held my entire core all the way to my profit target, it would be more profitable. But the mental side of it for me as a trader, and this is personal, right? That's why you need to figure out what works for you as a trader. For me, scaling out, taking pieces along the way, help me to hold trades longer without feeling like, oh my gosh, it's coming back against me. Where once I scale some out, I'm like, whatever. If it comes back, it comes back. Like it's very freeing mentally. Is it the most, profitable? Is it the best? No, absolutely not. But it helps me to actually follow my rules and take the scales where I should take them. So I'm very similar to Jesse when it comes to that.
Yep, I'm the same. It's a mental thing, and it allows those winners to run. Everybody always says, "Oh, you got to let your winners run." It is way harder to let your winner run when you're in your full size compared to when you're in, still 50%. Mm-hmm. And guess what? You and I, long term, we're probably making more money on those trades than the person who was in it with their whole position, holding and hoping all the way down to their final target. And then, it reaches 75, 80% of the way, and they didn't take anything. And then they get stopped out at break even or a tiny win or a little loss, where we took home, a paycheck because we were able to scale out of that trade and pay ourselves along the way. So for me, it's, I know where I want to enter. I know where I want to stop out. And I have 3 take profit zones. The first one is meant to protect me, right? If the trade turns around against me, it's not going to be that battle loss. The second one is to pay me because I'm right. And the third one is my bonus money.
Yeah. What's funny is I scale out in 3 different areas too. My areas are always set. So I have a plan before the trade and then I scale at those areas, but you're 100% correct. The first trade is more break even. Second one, you're actually starting to pay yourself. And the third, does it always go all the way to target? No, but you're more dealing with a smaller position size. So you can more freely be like, you know what, I'm gonna let it ride a little bit more and see if I can get a home run on this. And if it doesn't, then you're getting it out well before break even. You're like, whatever, it didn't work out that time. But it's way more freeing for me mentally to trade that way. And if nobody's tried it, don't put real money on the line, but just try it in a simulated environment where you don't have any risk and just see how it impacts you. Does it help you with trading? Does it make it easier for you to manage the trade? Does it make you hold trades longer? And that's really all that we're trying to accomplish from it. Is it the best? No, but it worked really well for us. So I recommend other people try it. Does ICT work? I think it does. I mean, I'm not an experienced ICT person. I know a little bit about it. I know people have definitely passed and are funded with ICT methodology. Pretty much anything works as long as you trade it the same way every day and as long as you manage your emotions. So it can work. I've seen it work. I'm not an expert on ICT, but as far as I know, it's just kind of like basic concepts of the market and just renamed and stuff. So, I mean, I don't see why it wouldn't work as long as you follow it the same way every day. What else do we have for questions? We're also at an hour, so we're going to end up wrapping up soon.
Did you ever have a breakthrough moment where you began making profits, or was it gradually improving performance? No breakthrough moments. I mean, you have moments of aha, like, but it's for me, it was like, oh, aha, I understand this now. It wasn't aha, and then tomorrow I was this amazing hedge fund trader. It's gradual. It just takes time. Everybody out there selling you dreams of, hey, you can make $1 billion the first trading just 10 minutes a day, and that's just not the reality of the world. It's not it. That's not how it works. It's snake oil, honestly, frankly, it's what it is. And it just takes time. Remember, people go to college for 4 years. Year number 1, trying to figure it out. Year number 2, 3, and 4, studying their craft, graduating their 4th year, getting paid bottom dollar as they learn their career in the real world. Trading is no different. This is the most competitive career you're ever going to try in your entire life. Trading is the best, worst way to make money. The reality, you wake up some days feeling like a hedge fund trader, and then the market humbles you the next day, and you're like, damn, man, maybe I should just go put fries in bags. It's the reality of this. Is not easy. It takes time. Is it worth it? You ask me now, yeah, it's worth it.
I'm curious what % of funded traders are sizing dynamically. Could you elaborate a little bit? Are you saying they're adjusting their size based on the size of their stop, or like if you could clarify a little bit, I might be able to answer that for you. Yeah, so for the $20 thing, I don't know if it's 60 days or 90 days. I don't think it's a month. I'm not sure. It wouldn't be a month, because then people would just use the 20 and get a credit for like a practice account. They could glitch the system, basically have a practice account for free forever, as long as they tune in on the stream. So I'm assuming it's, oh yeah. Also, it's anybody that's gotten a credit before, you can't get another one. You're not eligible. You guys keep the same system. Our plans are pretty flexible. I don't know what you're looking for in that. Maybe if you could elaborate a little bit more, I might be able to answer that question. Are static accounts better? I don't know if they're better or worse. I can tell you they're going to be more similar to what you would experience in the brokerage account. As long as you're managing risk correctly, it doesn't really matter. Honestly, you can trade an EOD account or a static. It doesn't matter. But static is more like a traditional actual funded account. So I guess it's better in that sense. But overall, I don't know if there's a better win rate between EOD and static. I just don't know. I haven't looked at it. That depends on the account you set up. What I recommend is if you get an account, look at your total account, like drawdown amount, and risk 20% of that. Do not risk the 40%. That's an emergency stop. Risk 20%. You will find far more success that way. It's not necessarily going to slow you down, because you really can't surpass, I think, more than 20% on the upside anyways, right? Base hits. Think about base hits on the other side too. You don't want to lose too much. You want to keep those things about 1-to-1. So reduce your risk about 20%. Best case is 10%, but 20%, definitely there's a huge uptick in success rate if you do that. What else we got? Yeah, daily base hit. Look, we're trying to get people to think about long-term success, right? Other firms, they don't look at your risk a certain, they give you too much risk, they give you too much leverage, and they hope that you blow up, right? With us, if you pass our tests, you go to the brokerage. Who do you think puts the money in the brokerage? We do, right? We want you to do well in the brokerage, because when you do well, we do well, right? So we're aligned in that sense. So with base hits and with the drawdown types that we have, we're trying to get people ready to trade the way they should trade to have long-term success, right? If we let people risk their entire account and YOLO and do crazy stuff, yeah, that's cool to pass an assessment, but that doesn't it doesn't transfer into a brokerage account. They just end up blowing the brokerage account, and that's not good for anybody. It's not good for the trader. It's not good for us. We want our traders to do well in the brokerage account. We want them to kick butt. We want them to make money, and that is through proper risk management. I know it's not fun. It's not glamorous. You can't risk all your money at one time. I know it's getting away from the gambling. It's not as fun. You don't get the big dopamine hits, but I can tell you, you'll make a lot more money in the long run if you manage your risk correctly. And that's all we care about. We're trying to get people ready for the brokerage accounts. What else we got? Motive Wave works right now through Rhythmic. We don't cover, Motive. We don't pay for it for people. We do have a free, Delta Trader is free if you request it. If you have Rhythmic, Trade-Of-8, Ninja Trader, all that stuff. I think they just opened up again, and maybe they're onboarding new companies. I don't know if we're going to do something like that. Maybe a lot of people request it, so maybe we'll try to get on board with them. I don't know if that will happen or not. It just depends on, if they think we're a good fit for them. I don't know. So we got a little under 5 days to pass. No, I think we at one point had 4 days to pass, and look, it doesn't give us enough data to really understand, is this person just getting lucky for 5 days or 4 days or whatever? Because that's really what it comes down to. And luck's cool, but we're not looking for people that are making money based on luck. We want people to actually have a strategy. So that's why we give big discounts on longer plans. It's because we want them to do well over a longer period of time. Why? Because it mitigates our risk. It lets us know that they know how to handle the account, and they're not just getting lucky on a couple days, right? And that luck's cool, but there's so many other firms you could go to if you're looking to pass really quick and get a quick payout. There's tons of people that can game that system. But look, if you're serious and you want to be a long-term professional, then I think we're the best choice, because we really try to put a framework for people that protects them from themselves and also gives them long-term sustainability. And that's all we're trying to do is we want to help people get better at actually trading and not gambling. What else do we have? Any other questions for Jesse? That could be a one for Jesse. How do we find a good strategy if we are just starting? From Victoria.
Okay, so it's KISS, right? Keep it simple, stupid. I love that acronym. Go look to trade patterns. Learn to trade patterns. Patterns show up always. They're always out there. And start with that. Pick a pattern like the head and shoulders that I showed earlier on the hourly chart, and learn to trade that pattern. There's multiple ways to trade a head and shoulders. And then pick another pattern and go learn about that one. So on and so forth. We're in a bullish environment. I wouldn't hold a head and shoulders pattern, for the next week, thinking that I'm going to be a millionaire, because we're in a bullish environment. A head and shoulders a bearish pattern. When it works, it's going to work. You're going to make some money, but I wouldn't hold it too long. So also learn about trends. So you want to start there, right? Trends and patterns, and start slow. Paper trade, sim trade and prop trade. So you protect your capital. If you got money in the bank, don't go grab $20,000 now, throw it in the account, because you're probably gonna lose it all. Just honestly, So take your time, get a good education going. I know there's courses out there galore. I have my own. If you don't want to go through courses, you're gonna go through a whole lot of videos on YouTube. I got a ton of videos on YouTube. Go through those and learn about patterns and trends, and start there. Right, little by little. Don't get overwhelmed. This is a marathon. It's not a sprint. Get into the mindset of when you sit at your trade desk, you're going to sit down. You're brand new. You just said, my job this year as a brand new trader for the next 12 months is to not blow up more money than what my budget allows to start this new business. The new business being becoming a trader.
Yeah, and the nice thing about patterns, just to add, is look, patterns you can backtest, right? And that will give you extra conviction to take those trades. So go back on an hourly chart, load a whole ton of data and look for head and shoulders and see how many of those patterns played out, where you needed to risk, where you could have took profits, right? That's how you start building a book of strategies. And then once you get really good at it and you start collecting data for those strategies, you could use a practice account or whatever. We recommend our practice accounts because you can collect the data and analyze it. Now you have the data. You can figure out, okay, head and shoulder patterns really don't work that great on Mondays, or they work really good on Tuesdays, or, let's say max favorable excursion could actually be here, or my stops could be here, and you can tune your strategy that way.
Yep.
But your first step is, he just gave you a very simple one. Look for patterns, go back and back test like a year's worth of data and figure out, look at them, go like, okay, yeah, this pattern played out. Awesome. Okay, cool. One set up there. Oh, this one didn't play out. This one did. And then you come out at the end going, you know what? This is a 40% win rate, 3R. Like, this is a great setup. And that's how you find, setups. You make your own, you figure it out, you learn from others, and then you test it yourself, figure out what makes sense to you, what doesn't. But back test the patterns that way. Super simple. What else do we have? Anything else? If not, let's wrap up the show. I don't want to take too much of Jesse's time today. We really appreciate you being on the show. Again, if you guys are going to get an account today, please use Jesse W. Use his account code, creation code. Please use it. It really helps him out. And we really appreciate his time today. Also, check out his stream.
I appreciate it. Oh, one thing to touch on. I see Victoria says there, I like that. It makes it easier to see progress over time instead of pressure to win every trade. There's never pressure to win every trade. If you have pressure to win every trade, you're going to lose a lot of trades. You're not supposed to win every trade. We're not supposed to be right. We're supposed to manage risk and put ourselves in setups that give us an edge. That's it. That's it. The only thing we can control is how much money we lose. That's all.
Awesome. I think that's it, guys. So we're going to go ahead and wrap it up. Thanks for joining. I appreciate it. Thank you, Jesse, for joining.
Oh, thank you guys for having me. It was fun.
Yeah. Peace, guys.